Ethereum is testing a crucial resistance level. If that sounds interesting to you, make sure to continue watching this video. We are getting close to 900 Telegram members. If you guys want to stay up to date with my charts as well as my analysis, make sure to check out the link in the bio. Hey guys, Pingu Charts here. Welcome back to another Ethereum analysis video. As always, if you do enjoy my content, make sure to hit that like and subscribe button. If you guys are interested in $35,000 trading bonus, make sure to check out the link in the bio. And I hope you guys had a wonderful weekend. And seeing Ethereum right now, you can see that we are testing a very key resistance here at 1657. For those of you that were part of Telegram channel, we did manage to take quite a few trades over the weekend, just scalping opportunities, and I mentioned to you guys to be very careful about these false breakdown formations that we have seen prior. You can see we saw the same sort of formation. Now of course I was expecting a move into the Asia hours, hoping for that 1596 retest, and the reason for that was because we had quite a bit of confluence within this range, but you can see instead we did see a nice continuation towards the upside. Usually we see these pumps during market open, but of course during Asia hours anything can happen, so I wasn't really expecting too much on that position. And right now you can see that Ethereum is trying to break above this key resistance as 1657. A lot of you guys are probably eager to short, but I do want to warn you a few things. Number one, of course, we do have Fed meeting coming up this Wednesday for interest rates. We want to be very, very careful not trying to get caught into any positions because of how volatile the market's going to become, as well as the fact that you can see that if Ethereum does indeed in fact break above the 1657 level, our take profit, or of course rather our area of resistance, would remain at 1715. The reason for that, I'm sure you guys are probably wondering, is because this is pretty much where the move set started, and that likely is where things are going to end up going. Now of course we didn't quite get that retest on 1518, although we did manage to catch this whole move towards the downside, so we did play quite a bit of profits in terms of this move, and we saw that V-shaped recovery. But it was going to be very important for the bears to try to reclaim these levels here at 1612. We wanted to see that level of resistance being used for that confirmation, but right now of course with Fed meetings things become extremely manipulated. You can see even on the hourly right now we are seeing quite a bit of manipulation candles. As you guys already know, manipulation candles are ones without any sort of wick opportunities. You don't see any right here, and you don't see any right here. This of course says that this moveset is quite a larger fake out, but of course trying to understand where exactly to enter those shorts is usually the harder part for a lot of traders. Luckily for you guys, I can give you quite a bit of ranges to kind of give you an idea of where to start looking for scalps. Number one, you want to pay attention to the wick highs on the daily. You can see that we had the same sort of continuation right here, a false breakout of the exponential moving average followed by a larger capitulation. Usually I would wait for the daily candle to end up closing. The second candlestick usually ends up leading into a higher wick and then the continuation to the downside, but right now the daily is looking to complete this larger V shape. That logic does not apply until we end up seeing that retest on 1715, which we most likely end up seeing with of course the Fed news and the volatility in the market. If of course the daily somehow ends up closing below the 20 exponential moving average, then that's going to be the continuation for us to be looking for those shorting opportunities. But right now is just a time to be waiting and seeing how Wednesday plays out. The reason for that is you really don't want to try to get caught out on the wrong move set, mostly when it's news related, because trying to guess where exactly to start entering those scalping opportunities will always end up making you more emotional, because of the fact that even if it doesn't make sense, it doesn't matter. Usually with news we tend to see a lot more volatile positions, and this is exactly why I recommend to you guys to only be looking for scalps. If you are trading, you are only trying to be in the market for maybe an hour or two, in and out of the market, and of course waiting till Wednesday to see which direction of the trade you want to enter for the next few months. But that's pretty much all I have for you guys today. As always, if you do enjoy my content, make sure to hit that like and subscribe button. If you guys are interested in $35,000 trading bonus, make sure to check out the link in the bio, and hope you guys have